We've all been there, right? Staring at a chart, watching the price just magically bounce off some invisible floor or get smacked down by an unseen ceiling. We call it support and resistance. But to really master it, we have to go way beyond just drawing lines on the chart. We have to learn the secret language the market is speaking. And today, that's exactly what we're going to do. All right, let's decode this thing.
Look, this is a super fundamental idea, but the real edge, the real magic, comes when you truly get that these price movements are not random. As the source material puts it, they are controlled by invisible forces. And these aren't just lines from a textbook. They are powerful psychological barriers. They're built from the collective hopes, fears, and decisions of millions of traders just like you.
And that, right there, that is the million-dollar question, isn't it? How do you go from just kind of seeing these levels on a chart to actually using them as a core part of a professional trading strategy? Well, that's exactly what we're about to lay out for you step by step.
So first things first, let's just quickly nail down our understanding of what these forces really are. We need a solid foundation to build on. We're about to make the invisible visible.
Okay, this is the absolute key. Let's really dig into this. Support and resistance aren't just price points. Think of them as the market's collective memory. There's zones where a huge battle between buyers and sellers happened in the past. And believe me, traders remember that. That memory is what creates these predictable areas where the battle is probably going to heat up all over again.
Now, to really get the psychology here, it helps to use the most powerful analogy we've got. Just imagine the price is moving inside a room. It's got a floor below it and a ceiling above it. This simple little mental picture, it contains a surprisingly powerful and profitable insight.
And here's where you see the psychology in action. Support, that's our floor. It's always below where the price is right now. It's that spot where buyers look and go, you know what, this is a good price, I'm buying. Then you have resistance, the ceiling, which is always above the price. That's where sellers start to get nervous and think, okay, this is a great spot to sell and take some profit. It's just a constant tug-of-war between these two mindsets.
And here it is. This is the first big aha moment for so many traders. Think about it. What happens if you fall through the floor of a building? Well, that floor you just broke through, it's now the ceiling above your head. It's the exact same principle in the market. When the price smashes through a support level, that old floor often becomes the new ceiling, the new resistance. And yeah, the reverse is true too.
And listen, this is not just some neat little chart pattern. The source material makes it crystal clear that this role reversal principle is where the pros find some of their absolute best, highest probability setups. Just understanding and really internalizing this one concept, it's a massive leap forward.
Okay, so we've got the theory down. But how do we actually find these levels on a real, live chart? Let's switch gears to the practical side of things and talk about how to draw these battle lines effectively.
The pros, they never just look at one chart. They use what's called a top-down approach. So they'll start with a monthly chart to see the huge long-term levels that the big institutions are watching. Then they zoom into the weekly chart to kind of refine those zones. And finally, they drop down to the daily chart to pinpoint the exact levels for actually placing a trade. It's a process of going from the big picture down to the nitty-gritty details.
Now, this is a pro-level concept right here, a confluence zone. This is where you find a super level. It's not just a previous low acting as support. It might be that previous low plus a key moving average, plus a big psychological number like $100, all coming together in the exact same spot. When you get this stacking of factors, you get an incredibly powerful zone.
And this just brilliantly shows why finding these confluence zones is so important. According to our source, trades taken at these stacked zones have a 70 to 80% higher success rate than a trade taken at a level with just one thing going for it. Finding confluence gives you a massive statistical edge. It's a real game changer.
All right, we know what support and resistance are. We know how to find the strongest levels. Now for the final piece of the puzzle, how do you actually trade them with discipline? Let's take a look at the price breakout.
Okay, here's a secret. Professionals very rarely chase that first big explosion through a resistance level. They're patient. They wait for a specific three-step sequence. First, you get the breakout, and it has to happen with a big surge in volume. Second, the price will often pull back to retest that old ceiling, which has now become the new floor. And finally, they look for the bounce off that new support to confirm the trend is for real before they put their money on the line.
So how do you keep from getting caught in a false breakout, one of those nasty traps that just reverses on you? Well, this checklist is your guide. You've got to see that big volume confirmation. You want the whole market and the stock sector to be moving in the same direction, and this is critical.
You need to see follow-through. The price has to prove it can stay above that broken level. Ticking these boxes, it dramatically increases your odds.
We've covered the what and the how, but this is maybe the most fascinating question of all. Why does the market even behave this way? I mean, it's not physics, right? It's pure, unfiltered human psychology.
And there it is. The secret is, there is no secret. Support and resistance levels work because everybody's watching them. When thousands of traders and algorithms and giant funds all believe that a certain price is a floor and they all put their buy orders there, well, their collective action creates the floor. It's an absolutely powerful self-fulfilling prophecy where our shared belief literally becomes market reality.
So the biggest takeaway here is this. Charts are not just lines. They are a record of human psychology. They are a map of the market's memory. By learning to read support and resistance, you're learning to understand that memory. And that really just leaves us with one final thought. If you know for a fact that the market remembers, what questions are you going to ask it next?